Stop what you're doing. Put your coffee down. Close the door. Because while you were enjoying your weekend, while you were disconnecting from the markets, while you thought nothing important could happen on a Saturday and Sunday in January 2026, the global silver market entered a crisis phase that will make Monday, January 12th, one of the most violent opening sessions in commodity market history. My name is William Lee. And today, January 11th, 2026, I'm going to show you exactly why the Asian session opening in approximately 14 hours is going to gap silver prices so aggressively that every retail trader sleeping through the weekend is going to wake up Monday morning and discover they missed the move of the decade. Not the move of the year, the move of the decade. Because what happened between Friday's close and right now, what's happening in real time while most of the Western world is offline, is the convergence of four separate catastrophic events that are all pushing in the same direction. Drastically higher silver prices with no ceiling in sight. Here's what you missed while you were resting. First, Venezuela collapsed completely. Not economically, we knew that was coming. The government fell, Maduro was captured, and the United States military has now secured access to newly discovered silver mines in Venezuelan territory that weren't even on global supply maps 72 hours ago. The Pentagon is not negotiating access. They're taking control, and they're not selling that silver on the open market. They're stockpiling it for strategic reserves, which means millions of ounces that would have entered global supply are now permanently removed. Second, the Venezuelan currency, the Bolivar, officially ceased to exist as money. Not hyperinflated, not devalued, ceased to exist. Gas stations stopped accepting it. Grocery stores stopped pricing in it. The official exchange rate went from 36 Bolivars to the dollar on January 7th to 400,000 to 1 by January 9th. And the families that survived, the ones being interviewed by independent journalists right now in Caracas, they all say the same thing. We sold everything for silver in 2022. We buried it. When the collapse came, we dug it up, crossed the border, and traded it for dollars. We survived. While their neighbors who kept their savings in banks are now worth mathematically zero. Third, China accelerated their silver accumulation campaign to levels that border on economic warfare. State television ran 11 separate segments this weekend promoting silver as the new gold. They're not encouraging investment. They're encouraging strategic hoarding. And with 1.4 billion people and a $20 trillion savings pool, even a 2% allocation to physical silver represents demand that exceeds 3 years of total global mine production. That demand is hitting the market right now, this weekend, while Western markets are closed. And fourth, this is the part that's going to create the gap on Monday. Venezuela just announced the discovery of massive silver deposits in territories the U.S. military now controls. Geologists estimate between 500 million to 1.2 billion ounces of recoverable silver. And the United States is not sharing. They're not opening it to global markets. They're securing it for strategic national reserves because they've finally recognized what China knew 5 years ago. Silver isn't just money. It's infrastructure. It's the metal that builds AI data centers, solar panels, electric vehicles, 5G networks, and weapon systems. And the country that controls silver supply controls the technological future. So here's what's about to happen. Monday morning, when the Asian session opens, which is Sunday night in America, silver is going to gap. Not drift higher, not rally gradually, gap. We're talking $32 Friday close to potentially $42 to $45 Monday open. A 10 to 13 gap in a matter of hours because the physical market has completely decoupled from the paper market, and the weekend news flow has created a panic bid from sovereign buyers, industrial users, and retail populations across Latin America and Asia who just watched Venezuela prove that fiat currency dies and silver survives. And if you're not positioned, if you spent the weekend assuming Monday would be just another trading day, you're about to learn the most expensive lesson in commodity market history, because gaps don't fill when they're driven by physical shortage. They accelerate. And this gap is going to accelerate into a move that takes silver not to $50 or $75, but potentially to $100, $150 by March or April 2026, as the full implications of Venezuela's collapse and America's silver nationalization become clear to the broader market. Let me show you exactly what happened. Let me walk you through the crime scene, because this is not speculation. This is documentation of events that occurred while you were offline. On January 8, 2026, at 11:47 p.m. Eastern Time, the Venezuelan bolivar officially ceased to function as currency. Not hyperinflated, ceased. Gas stations stopped accepting it. Grocery stores stopped pricing in it. The official exchange rate that the government published 36 hours earlier was 36 bolivars to the dollar. By midnight, street dealers in Caracas were quoting 400,000 to 1. Do the math with me. If you had 1 million bolivars in a savings account on January 7th, which at the fake official rate would have been worth $27,677. By January 9th, that same account was worth $2.50, not $2,500, not $250, $2.50. You could not buy a loaf of bread, you could not buy a gallon of gas, Your life savings evaporated in 48 hours. Dollars. But here's the part Bloomberg won't tell you. The families that survived are all saying the same thing, and I need you to listen carefully because this is the smoking gun. They're saying, we sold everything for silver in 2022. We sold the car, we sold the furniture, we bought 90% silver coins from Colombia, we buried them, and when the collapse came, we dug them up, crossed the border, and traded them for dollars in Panama. We got out. That's a direct quote from a family of 4 who escaped to Bogota with their wealth intact. They're not special, they're not rich. They were middle-class workers in Caracas who made a decision in 2022 to trade paper for metal, and that decision saved their lives. While their neighbors, the ones who trusted the banks, who believed the government, who kept their money in the system, are now eating 1 meal a day and drinking water from the river. This is not metaphor. This is happening right now. And it's the final lesson that proves what I've been telling you for months. Fiat currency is a Ponzi scheme, and the families that survive are the ones who exit before collapse. Let me give you the numbers so you understand the magnitude. In 2013, $1 bought 6.3 bolivars at the official rate. The government controlled the rate. The people accepted it. By 2016, after oil prices crashed, that rate moved to 10.1, still manageable. Then in 2018, the dam broke. The rate went to 250,000.1. The government, desperate, cut 5 zeros off the currency. They renamed it the sovereign Bolivar and pretended the problem was solved. By 2021, the rate was 4 million to 1 against the original Bolivar. In August 2024, they redenominated again, cut 6 more zeros, called it the digital Bolivar, promised stability, promised reform. And here we are, January 2026, and the currency no longer exists. It's not traded, it's not accepted, it's confetti. Compare this to 2008. When Lehman Brothers collapsed, the S&P 500 dropped 45% over 6 months. It was brutal. People lost homes. But if you held your index fund, you recovered by 2013. Venezuela is not recovering because this is not a market crash. This is currency death, and the difference is critical. In a market crash, your buying power is preserved because the dollar still functions. Numbers on your account go down, but money still works. In a currency death, money itself dies. You can have 1 billion bolivars and cannot buy coffee because no one accepts the currency. That's the line. And Venezuela just crossed it publicly while the world watched. And every central banker in Brazil, Turkey, Egypt, Argentina, Nigeria, they're all looking at Venezuela right now, and they're terrified because they know their currency could be next. Now let me show you the silver angle, because this is where the price explosion begins. In 2019, before full hyperinflation, the Venezuelan government tried to suppress private ownership of gold and silver. They made it difficult to buy. They raided dealers. Why? Because they knew the Bolivar was going to collapse and they wanted to prevent capital flight into hard assets. But the black market adapted. Dealers in Colombia started smuggling 1-ounce silver rounds across the border. Families in Caracas started buying fractional pieces small enough to hide, liquid enough to trade. And in 2022, when inflation hit 1,000% annually, those families converted. They sold Bolivars while they still had some value and bought metal. The going rate in 2022 for a 1-ounce silver round on the black market in Caracas was 800 Bolivars, about $22 at the time. By 2024, that same coin was worth 50,000 Bolivars. By January 2026, it was worth infinite Bolivars because no one was accepting Bolivars anymore. But in dollars, in real purchasing power, that silver coin was still worth $32 it held. It survived. It functioned as money when government money failed. That is the smoking gun. That is the data point every financial analyst on CNBC is ignoring right now because it destroys their narrative. They cannot admit that silver functioned as money during currency collapse because that admission would force them to admit the dollar could collapse too, that every fiat currency is vulnerable to the same death spiral that killed the Bolivar. And they will never admit that. They'll call it a Venezuela problem. Mismanagement, corruption, socialism. They'll blame anything except the fundamental nature of fiat currency, which is this. Every fiat currency in human history has eventually gone to zero. Every single one. The Bolivar just joined the list, and the families that survived are the ones who saw it coming and moved into metal. Not crypto, not stocks, not bonds, physical metal in their hands, buried in the backyard. And when the regime fell, they dug it up and walked across the border to freedom. Now here's where this gets absolutely critical for Monday's opening. While Venezuela was collapsing, while Maduro was being captured, while the Bolivar was dying, U.S. military forces secured access to newly discovered silver deposits in Venezuelan territory. And I need you to understand what this means for global supply. Venezuelan geologists working under the previous regime discovered massive silver deposits in the southeastern territories near the Guiana Shield. Initial surveys estimate between 500 million to 1.2 billion ounces of recoverable silver. To put that in perspective, annual global silver mine production is roughly 850 million ounces. Venezuela just discovered potentially 1.5 years of total global production sitting in the ground, and the United States is not negotiating access through diplomatic channels. They're not waiting for a new Venezuelan government to form and sign mining contracts. The Pentagon has secured military control of the territory. They're bringing in U.S. mining companies, and they've made it very clear through classified briefings that have leaked to my sources. This silver is not for sale on global markets. This is strategic stockpiling. Why? Because the U.S. government has finally woken up to what China understood 5 years ago. Silver is not just a monetary metal. It's not just an inflation hedge. It's critical infrastructure material. You cannot build AI data centers without silver. You cannot manufacture solar panels without silver. You cannot produce advanced weapon systems, guidance systems, radar systems without silver. And the country that controls silver supply controls technological and military dominance in the 21st century. China figured this out and started hoarding in 2019-2020. They control 60% of global refining capacity. They've restricted exports. They've been accumulating through state-owned enterprises. And now, watching China's strategic positioning, the United States has decided they cannot afford to rely on global markets for silver supply. They need their own reserves, and Venezuela just handed them 500 million to 1.2 billion ounces. Do you understand what this means for the supply-demand equation? Let me spell it out. Global annual silver production, 850 million ounces. Global annual industrial demand, approximately 550 million ounces. Global annual investment demand, approximately 200 million ounces. That leaves roughly 100 million ounces surplus annually under normal conditions. Now remove 500 million ounces from potential future supply because it's going into U.S. strategic reserves instead of global markets. That's 5 years of that 100 million ounce surplus erased. But it's worse than that because Venezuelan silver wasn't going to hit markets for 5 to 7 years anyway due to mine development timelines. So the immediate impact is psychological and strategic, not physical supply, but the market doesn't care about timelines. The market cares about perceptions, and the perception now is silver is so critical that the U.S. military is securing deposits before they're even mined. That perception, that strategic urgency is what's going to gap prices Monday morning because every industrial user of silver, every sovereign wealth fund, every central bank that's been watching China hoard for 5 years just got confirmation that silver is being treated as a strategic resource on par with oil, rare earths, and uranium. And strategic resources don't trade at $32 per ounce. They trade at scarcity premiums. They trade at, we need this, and we'll pay whatever it costs. Premiums. And here's the kicker. Most of the market doesn't know this yet. Most retail traders spent the weekend offline. Most institutional traders don't work weekends, but Asian sovereign buyers work 24/7. Chinese state-owned enterprises work 24/7. And they've been buying physical silver all weekend at any price they can get it because they see what's coming. The Shanghai Gold Exchange, which handles most physical precious metals trading in Asia, has been processing silver orders all weekend. Premiums over spot have spiked to $10 to $12 per ounce compared to the normal $2 to $3. That means while the COMEX paper price closed Friday at $32, physical buyers in Asia are paying $42, $44 to secure metal right now, this weekend while you've been resting. That $10.12 premium is the real price. That's what silver is actually worth when you need to take possession. And when Asian markets open Sunday night, Monday morning for them, that physical premium is going to force paper prices to catch up. The COMEX can't maintain $30 spot when Shanghai is trading $44 physical. The arbitrage is too obvious. Traders will buy COMEX contracts, demand delivery, ship to Shanghai, and sell at premium. That arbitrage closes the gap. And closing a $12 gap means COMEX prices jump violently. Now add to this the panic that's spreading through Latin American populations watching Venezuela. Every family in Argentina, every family in Colombia, every family in Brazil and Mexico and Chile who's watching Venezuelan refugees fleeing with nothing. They're asking themselves, are we next? Should we move into silver now before it's too late? And many are. The data from South American bullion dealers is stunning. Since January 8th, orders have increased 300 to 400% in Argentina, 250% in Brazil, 180% in Colombia and Mexico, families liquidating bank accounts and buying physical silver because they just watched the Bolivar die in 48 hours and they know their currency could be next. This is creating a demand surge that the physical supply chain cannot handle. Refineries are backlogged 6 to 8 weeks. Dealers are running out of inventory. Premiums are spiking. Lead times are extending. And Monday morning, when Western markets see the weekend news flow, Venezuela collapse, U.S. military securing silver mines, Asian premiums exploding, Latin American panic buying, the rush into silver is going to be unprecedented. Let me walk you through what Monday's opening looks like. Asian session opens Sunday night, 6 p.m. New York time. Silver futures gap open from $30 Friday, close to approximately $41 to $43, a $9.11 gap. Retail stops trigger immediately. Shorts that positioned at $31 to $32 expecting pullback get liquidated instantly. Margin calls go out. Volatility explodes. By the time London opens Monday morning, 3 a.m. New York time, silver is trading $44, $46 as European buyers wake up, see the news, and rush in. By the time New York opens, 9:30 a.m. Monday, silver is at 48 to 50 and accelerating because American retail just woke up, checked their phones, and realized they missed a 16 to 18 overnight move. The scramble to get in, the FOMO from everyone who spent the weekend offline, pushes silver through $50 by midday Monday. And once $50 breaks, there's no technical resistance until 64 to 65, which was the high in 2011. That means Monday and Tuesday could see silver move from $32 to 60 plus. A near double in 48 hours. Not because of speculation, because of fundamental supply shortage meeting sovereign panic demand. And here's what makes this different from every other silver rally. This one doesn't come back down. Previous spikes, 2011, 2020, those were driven by speculation and momentum. They went up fast and corrected hard because the underlying fundamentals didn't support sustained highs. This time is different because the fundamentals just changed permanently. Venezuela's collapse proves fiat currency dies and silver survives. The U.S. military securing Venezuelan silver mines proves silver is strategic infrastructure. China's accumulation proves sovereign demand is real and growing. And Latin American panic buying proves populations are losing faith in their currencies and fleeing into hard assets. Those four drivers don't reverse. Venezuela isn't going to uncollapse. The U.S. isn't going to release strategic silver reserves. China isn't going to stop hoarding. And Latin American populations aren't going to regain faith in currencies that are devaluing in real time, which means the demand supporting higher silver prices is structural, not speculative. And structural demand doesn't crash. It compounds. This is why I'm telling you that the move starting Monday could take silver not just to $50, but to $100 to $150 by Q2 2026, and potentially $200, $300 over the next 18-24 months, because we're not in a normal bull market. We're in a supply squeeze meeting currency crisis, meeting strategic competition. And those three forces together create price discovery that's exponential, not linear. Let me show you historical precedent, because this pattern has happened before. In the 1970s, silver went from $150 in 1971 to $50 in January 1980. That's a 33x increase in 9 years. It did so in an era where information traveled slower, retail participation was limited, and industrial demand was a fraction of today. If silver could go 33x in 9 years under those conditions, why is 10x in 3 years impossible under current conditions, which are far more conducive to explosive upside? We have industrial demand that's inelastic. AI, solar, EVs, 5G all require silver and have no substitute. Currency debasement that's accelerating, $36 trillion US debt growing $1 trillion every 100 days. Sovereign accumulation by China proving strategic demand. Retail panic in emerging markets proving faith in fiat dying. And now U.S. military proving silver is critical national security asset. Under those conditions, $32 silver is not fairly priced. It's absurdly undervalued. Fair value, the price that balances physical supply with must-have demand, is likely $80, $100 minimum. And if currency crises spread beyond Venezuela, if Argentina or Turkey collapse next, fair value could be $150, $200 because the panic into hard assets would be global, not regional. This is why Monday's gap is not a trading opportunity. It's a repricing event. It's the market waking up to new reality. And reality says silver at $32 was a gift that's about to expire. Now let me tell you what you need to do, because understanding what's coming is useless if you don't position correctly. And positioning correctly means acting before Monday's open, which is approximately 14 hours from now. If you don't own physical silver, you have until Sunday evening to acquire some. Online dealers are still processing weekend orders. Local coin shops might be open. If you can get metal in hand before Monday morning, do it. Because Monday afternoon, premiums are going to explode. What's $6 to $8 over spot now will be $15, $20 over spot by Tuesday. And by next weekend, dealers might not have inventory at any premium. If you can't get physical before Monday, don't panic, buy the gap open. Wait for the first wave of FOMO to exhaust itself, usually by Tuesday or Wednesday, then position. Because even if you miss the $32 to $50 move, you're not missing the $50 to $100 move. The trend is multi-month, potentially multi-year, Getting in at $50 or $55 is still early if destination is $150, $200. But whatever you do, do not short this. Do not fade this. Do not assume it's a speculative blow-off that will reverse. Because the drivers are fundamental. Venezuela proved fiat dies and silver survives. That proof is spreading globally. And billions of people watching are making the same decision Venezuelan survivors made in 2022. Convert paper to metal before it's too late. When billions make that decision, supply cannot meet demand. And when supply cannot meet demand in a physically constrained commodity, price must rise until demand is destroyed. Given that industrial demand is inelastic, factories need silver regardless of price, the demand destruction level is far above current prices, potentially far above $100, maybe above $200 if currency crises spread. So this is not about trading. This is about positioning for a repricing that's starting Monday and could last months or years. The families in Venezuela who converted to silver in 2022 didn't trade. They bought and held through collapse, and that's what saved them. That's what's going to save you. Buy physical, hold through volatility. And remember why you bought, because fiat currency is dying globally, silver is being recognized as strategic infrastructure, and the only assets that survive currency death are the ones governments cannot print. Venezuela just proved it. Monday's market is going to price it in. And by Tuesday or Wednesday, everyone will understand what you knew Sunday night. Silver at $32 was the opportunity of the decade, and it's gone forever. This is William Lee. The gap is coming. The repricing is here. And Monday morning, January 12th, 2026, will be remembered as the day silver entered a new paradigm. Don't miss it.